Hello students, welcome to the lecture on cash flow and fund flow statements, and after this we will be able to learn the following objectives. Understand cash flow statement, discuss about concept of fund, describe funds flow statement and explain cash flow statement versus fund flow statement. Cash flow statement. Let me first tell you the meaning of cash flow statement in brief. Cash flow statements are essentially a financial statement that provides an analysis of the influx of revenue from various money-making endeavors on the part of the company. The cash flow statement's primary purpose is to provide information regarding a company's cash receipts and cash payments. The statement complements the income statement and balance sheet. Methods for preparing cash flow statement. There are two methods to prepare the cash flow statement. Indirect method. The indirect method or reconciliation method starts with net income and converts it to net cash flow from operating activities. Direct method. Under the direct method, the statement of cash flows reports net cash flow from operating activities as major classes of operating cash receipts and cash disbursements. Indirect versus direct method. In favor of the direct method, the principal advantage of the direct method is that it shows operating cash receipts and payments. In favor of the indirect method, the principal advantage of the indirect method is that it focuses on the differences between net income and net cash flow from operating activities. Usefulness of the statement of cash flows. The information in a statement of cash flows should help investors, creditors, and others assess the following: the entity's ability to generate future cash flows. A primary objective of financial reporting is to provide information that makes it possible to predict the amount's timing and uncertainty of future cash flows. The entity's ability to pay dividends and meet obligations. A statement of cash flows indicates how cash is used and where it comes from. The reasons for the difference between net income and net cash flow from operating activities. The net income number is important because it provides information on the success or failure of a business enterprise from one period to another. The cash and non-cash investing and financing transactions during the period. By examining a company's investing activities and its financing transactions, a financial statement reader can better understand why assets and liabilities increased or decreased during the period. Uses of cash flow statement. Cash flow statement is an essential tool for short-term financial analysis and planning. Its main advantages are as follows: planning and coordination of financial operations. Cash flow statement is useful in evaluating financial policies and current cash position. A control device. Cash flow statement is also a control device for the management. Useful to internal financial management. Since it gives a clear picture of cash inflow from operations, it is therefore very useful to internal financial management in considering the possibility of retiring long-term debts, in planning replacement of plant facilities, or in formulating dividend policies. Profit and cash positions. It enables the management to account for situation when business has earned huge profits yet run without money, or when it has suffered a loss and still has plenty of money in the bank. Short-term financial decisions. Cash flow statement helps the management in taking short-term financial decisions. cash from operations. Cash from operations shown in the cash flow statement shall be calculated as follows. Cash from operations is equal to cash sales, total sales minus credit sales, minus cash purchases plus cash operating expenses after adjusting accruals and prepayments. Concept of fund. The term funds are used to mean working capital in the funds flow statement. However, there are two concepts of working capital, that is, gross concept and net concept. The gross concept of working capital means the firm's total investment in its current assets. In its net concept, working capital is the difference between firm's current assets and current liabilities, such that net working capital is equal to current assets minus current liabilities. Sources of fund. The sources of funds are federal funds. New federal funding can be used to support clean energy loan programs. Banks. Banks are often willing to participate to simply get new business. Banks' own funds are mainly of three types: paid up capital, reserve fund, and portion of undistributed profit. Reserve fund. Reserve is another source of fund which is maintained by all commercial banks. This reserve belongs to the shareholders, and at the time of liquidation, the shareholders are entitled to these reserves along with the capital. Profit. Profits signify the credit balance of the profit and loss account which has not been distributed. Borrowed funds. Banks' borrowing is mostly in the form of deposits. Bank collects three kinds of deposits from its customers: current or demand deposits, saving deposits, and fixed or time deposits. Bonds. Several types of bonds may support loan programs. Private activity bonds, PABs. These are bonds issued pursuant to federal statute and IRS regulations that are federally tax-free. Revenue bonds. These are bonds tied to the revenues from specific projects. General municipal funds. Tax revenues can sometimes capitalize an energy efficiency or renewable energy loan program. Application of funds. The application of funds are loss from operations. Loss from operations either decreases the current assets or increases the current liabilities, or in other words, reduces the funds. Purchase of fixed assets. If any fixed asset like building, machinery, furniture or investments is purchased, it will reduce the current asset, cash, without any corresponding decrease in current liability. Repayment of loans, redemption of debentures or preference share capital. Any such repayment, including the payment of premium on redemption of debentures or preference shares, is an application of funds because it reduces the current assets. Payment of dividend. Payment of dividend and not proposed dividend is an application of fund if paid in cash. Other applications. Any loss such as embezzlement, compensation, donations, etc. involving cash is an application of fund. Increase in working capital. Increase in working capital as per schedule of changes in working capital represents investment in current assets, hence it is an application of funds. Funds flow statement. The funds flow statement is a report on financial operations changes, flow or movements during the period. Such a statement shows how the financial resources have been used during a particular period of time. The funds flow statement is an operating statement as it summarizes the financial activities for a period of time. Objectives, importance of funds flow statement. It generally serves the following purposes: analysis of financial position. The basic purpose of preparing the statement is to have a reach into the financial operations of the concern. It analyzes how the funds were obtained and used in the past. Evaluation of the firm's financing. One important use of the statement is that it evaluates the firm financing capacity. An instrument for allocation of resources. In modern large-scale business, available funds are always short for expansion programs, and there is always a problem of allocation of resources. A tool of communication to outside world. Funds flow statement helps in gathering the financial states of business. Future guide. An analysis of funds flow statements of several years reveals certain valuable information for the financial manager for planning the future financial requirements of the firm and their nature too, that is, short-term, long-term or mid-term. Procedure of marketing funds flow statement. Funds flow statements is prepared in two parts. The first one is sources of funds and the other is uses of funds or application of funds. The difference of these two parts is change in working capital. When sources of funds exceed the application of funds, it is increase in working capital, and when application of funds exceeds the sources, it is decrease in working capital. Difference between cash flow and funds flow statements. Both funds flow and cash flow statements are used in analysis of past transactions of a business firm. The differences between these two statements are given below. Funds flow statement is based on the accrual accounting system. In case of preparation of cash flow statements, all transactions affecting the cash or cash equivalents only is taken into consideration. Funds flow statement analyzes the sources and application of funds of long-term nature, and the net increase or decrease in long-term funds will be reflected on the working capital of the firm. The cash flow statement will only consider the increase or decrease in current assets and current liabilities in calculating the cash flow of funds from operations. Funds flow analysis is more useful for long-range financial planning. Cash flow analysis is more useful for identifying and correcting the current liquidity problems of the firm. Funds flow statement tallies the funds generated from various sources with various uses to which they are put. Cash flow statements starts with the opening balance of cash and reach to the closing balance of cash by proceeding through sources and uses. What is included in a cash flow statement? A cash flow statement comprises information on three activities. Operating activities. Operating activities include cash flows from all standard business operations. Investing activities. Investing activities include transactions with assets, marketable securities, and credit instruments. Financing activities. Financing activities on the statement of cash flows are much more defined in nature. Summary. Now in the end, let us summarize what we have learnt in this lecture. The cash flow statement's primary purpose is to provide information regarding a company's cash receipts and cash payments. The funds flow statement is a report on financial operations changes, flow or movements during the period. The statement of cash flows uses information from the other two statements, income statement and balance sheet, to indicate cash inflows and outflows. Indirect method starts with net income and converts it to net cash flow from operating activities.